Hello viewers. So in this video, I'm going to do a recap of a trade which I took last week. So the trade was taken on the 4th of October during the PM session. And as you can see, we identified a bullish bias on NASDAQ before the PM session. Now, for those who don't know what the PM session is, the PM session is basically 2 to 3 p.m. New York local time. That is something you should take note of. So that is the kill zone that I am interested in because that is where I get my trade executions from. Yeah, so as you can see here, I came up with a top-down analysis. And as you can see, we had the H4 time frame. Then we jumped to the M30 time frame. Then finally, we came up with an analysis on the M3 time frame. So now it's on the 3-minute time frame where we usually get our trader executions. So as you can see, this was the H4 time frame. Then the M30 time frame. Then finally, the M3 time frame. This was my top-down analysis in which I was able to predetermine a bullish bias right before the PM session. And now, as you can see, this is now my trade execution. Now, so when we entered the PM session, I was able to get a buy confirmation. And as you can see, the trader triggered successfully, and we eventually hit our profit objective based on the bias that we identified. Yeah, so I'm just going to recap this trade, and I believe most of you appreciate the simplicity in this model here. A moment. So now on this PDF here, what you can see is that the trading plan. So it's called the LFX analysis trading plan. So it's the NASDAQ PM session. So basically, we are focusing on the PM session. So I'm just going to peruse through this. So time placement, we're interested in 2 to 3 p.m. New York time, as I earlier on emphasized. Then the top-down analysis, we shall start from H4 up to M3. M3, that is where our trade executions will be confirmed. So here is just a breakdown over the top-down analysis. So of course, I will start with the H4 time frame. If the H4 time frame is not clear, then you can go to your daily time frame. So here we're getting basically the long-term perspective, right? The long-term perspective. So these are the items that we look out. I look out to map on my long-term perspective. Then we jump to M15. If M15 is not clear, then I usually look out for M30 and H1. And that is where I'm able to get my intermediate time perspective. And these are the items that I look out for with precision. And then finally, the M3 time frame. So in the M3 time frame, this is where we are looking out for the trade execution in the PM session between 2 to 3 p.m. New York time. So that is our short-term perspective. If M3 is not clear, then you can go to your M5, basically. So these are the things that I look out for when looking out at my short-term perspective. So let me just emphasize on the last item. These are entry levels. I call them entry PDRAs. So meaning I have about 1, 2, 3, 4, 5, 6, 7, 8. So meaning I have 8 techniques of how to get an entry. So meaning I won't have any fear of missing out on a trade because I have 8 techniques on how I can, get an entry. And over time, as I carry on with my breakdowns, I believe most of you will understand these entry techniques. So we have the order block, we have the fair value gap, we have the order block within a fair value gap, we have the fair value gap within a breakup block. So we have the balanced price range, which is the redelivered, rebalanced array. Then we have the mitigation block, breakup block, and inversion fair value gap. So these are the techniques that I look out for in my M3 time frame to get an entry within the PM session. And usually, the more techniques you have, the more you're confident and you're not scared of missing out on an entry because you know what you're looking out for. These are just some trade execution and management rules. Then, of course, we have a risk management rules. We have a position management rules. And finally, account management rules. For those who are doing challenge accounts and for those who are having funded accounts. So this is just a summary of the trading plan, which I use at the moment. Yeah, so now let me dive straight into the breakdown. So I'm going to use a software called It's called a JForex. JForex is what I use to back test. It's a free platform that you can use to back test your system, and I highly recommend it for people on a low budget. It's the best platform that you can use. So now let me jump straight to the H4 time frame, where we shall now try to get the long-term perspective, right? The long-term perspective. So this is my H4 time frame, right before the PM session on 4th October 2023. So now the first thing which I identified was what we call order pairing, right? So as you can see, price broke a low, and what happened was what we call order pairing, right? So that red square represents what we call order pairing. You can also call it a stop hunt. It's a stop hunt. Other people call it a Judas swing, but I'm going to call it order pairing. So what is happening here basically are the smart money are pairing their buy orders with sell stops that were resting below this low here. So as a result, a buy program has been activated. So right here we have what we call order pairing. Let me just note it down there. We have what we call order pairing. Order pairing. Let me just echo it out again. So order pairing, what is happening here? The smart money are pairing their buy orders with the sell stops that were resting below this low here. That is what we call order pairing. So as a result, a buy program has been activated, or we can say smart money buy program has been activated as a result of this order pairing, or what we call a stop hunt. Now, the next thing that I identified after this order pairing, I noticed, a break of structure somewhere there. So we had a level there that, broken. So right up there, we had a break of structure, or what we call a market structure shift, right? Now, all this was confirming to me a bullish bias, because now we are trying to look at the long-term perspective. So right up here, we had a market structure shift, a market structure shift there, right there. Now, at this point, I just knew price was, a bullish. My bias was technically bullish. So now what we were basically looking out for was for price to, retrace down and then continue going up. That was my anticipation. And that is how I confirmed that it was a bullish bias in essence. Now, where is price going to? Price has to draw to something. Now, what I was able to, identify is what we call failure swings, right? I'm going to explain it briefly. So if you notice, we have these swing points here, right? We have these highs failing to make higher highs, right? You can notice here we had a high. This second high failed to break the previous high. So this now becomes what we call a failure swing. Then we also had another one here, right? You can notice we had a high here, then it formed a lower high. So now this second lower high failed to break this previous high. That is why we call them failure swings, right? Failure swings. All these are failure swings. So let me just mark it out. So these are what we call failure swings. Failure swings. Now, failure swings present us low resistance, right? They offer us low resistance liquidity, meaning price will easily, break through these failure swings because we have low resistance right above these failure swings. So in summary, we have low resistance liquidity along these failure swings, and that is actually drawing price towards that area there. And that is how I was able to conclude the bullish bias in my H4 time frame. Now let us jump to, so we've just now done the long-term perspective. So this is our long-term perspective. Long-term perspective. And now next we're going to jump to our intermediate term perspective. So let me just jump straight to my M30. So now what do we notice here? So now this is the M30 time frame. As you can all clearly see, M30 time frame, right? Now, of course, the first thing I saw, we still had that stop hunt. The stop hunt is still present. So now the stop hunt from the H4 time frame is still present right here on our M30. So I'm going to mark from that low there, quote, broken. So here we have what we call a stop hunt, right? A stop hunt. And of course, we termed it as order pairing. So basically the smart money are pairing their buy orders with sell stops that were resting below this low here. So we have order pairing here. So meaning a buy program has been activated right? So after the order pairing, then price, pushed up, price pushed up, and we still have that market structure shift, which we identified from the long-term perspective. It's still there, right there. So now what we have here is what we call, so now right above here we have what we call external range liquidity, right? Right above here. And within that external range liquidity, we have what we call buy stops, right? So I'm going to call that external range liquidity. And basically we have buy stops there, right? So meaning that is our most immediate draw on liquidity right above there. So what is happening? Price is retracing to internal range liquidity. So we have internal range liquidity down there. So I'm just going to mark that. So down here we have what we call internal range liquidity. Internal range liquidity. And now the PD area we have is what we call a balanced price range, a balanced price range right there. They redelivered, are rebalanced, as you can all see there. So that is what we call internal range liquidity. So basically, price is price is within the internal range liquidity, and now it wants to then push towards external range liquidity. So now meaning this buy stops here at our external range liquidity, that is our draw on liquidity. That is where price wants to move next to, right? So from internal to external, then from external to internal, from internal to external. That is how basically price moves when it's trending from external range liquidity to internal range liquidity, and so on and so forth. That is something that you can take note of. Then something else we identified is what we call the market maker buy model, right? The market maker buy model. So I'm just going to illustrate it. So if you notice right here, we had an original consolidation. I think you can all see that. Price had an original consolidation right there. Then after the consolidation, we had an accumulation right there. Then we had another accumulation somewhere around there. So we have a consolidation, accumulation 1, accumulation 2. Now, meaning at our original consolidation, we have what we call, we have liquidity resting, right above it, right? And those are what we call buy stops. So that's my original consolidation. Original consolidation. And what is resting above it are what we call buy stops. So we have buy stops are resting right above here. So this is what we call the market maker buy model. So we have, of course, the sell side of the curve. The market maker buy model. Then we have the buy side of the curve, right? Let me just put it there. So on the sell side of the curve, we're having, price accumulating original consolidation. Then at the accumulation, they're basically stacking up orders. Then on the buy side of the curve, that is where we have what we call distribution, right? We have distribution on the buy side of the curve. Then we have accumulation on the sell side of the curve, right? Accumulation on the sell side, then distribution of those orders that were accumulated on the buy side of the curve. So that is it in summary. So this is our intermediate time perspective. And as you can see, the intermediate time perspective is still confirming to us the bullish bias. So this is my intermediate time perspective. Intermediate time perspective, right? Now, we are now going to get into the short-term perspective, and that is where we're going to get our execution. So let me just jump straight to the M3 time frame. So now, before I even mark anything, let me just mark out the PM session. So now I say the PM session starts from 2 p.m. New York time, and then it closes at, okay, it's from 2 p.m. to 3 p.m., right? To 3 p.m. So that is our PM session right there. That is the PM session. That is our kill zone time. PM session right there. I'm taking my time up because I want to explain it to the best of my ability. Yeah, so now that is the PM session between 2 to 3 p.m. That is where you're supposed to get your trade execution. And in case you get filled in, you should close your, exit your positions by 3:45, right? 3:45. That is about 15 minutes to the New York close. So now the New York session closes, the NASDAQ trading session closes at around 4 p.m. So by 3:45, you should be exiting your positions before. So in essence, close your positions 15 minutes before the close of the trading session, right? That is something I want to emphasize. Okay, now let us look at this as a short-term perspective. So what do we see? What do we see here? So we had some bit of order pairing here. I can see some order pairing there. So what happened there is the smart money appearing their buy orders with the sell stops that were resting below that low. So meaning it's a buy program that is being activated. And then somewhere here we had a market structure shift, as you can all see, a market structure shift somewhere there. And then what you notice now, as price, shifted up, it then began to retrace down. So now when it was retracing down, what do you notice? I talked about failure swings. So here we have failure swings present. And these are failure swings present as what we call low resistance, right? Low resistance liquidity. Those are the failure swings there. Up to there. So let me just mark them. These are failure swings. Failure swings right there. So now as price was retracing, what do you notice? So now just PM session, right, you can notice we have what we call an order block there. So the reason why it's an order block is because we have a down close candle, right? You can see that black down close candle there. That is that forms to us, gives us that order block there. So meaning price is basically reacting to an order block right at the start of the PM session, right? So there we have an order block. We have an order block there. Let me mark it there. And as you can notice, this order block is right at the start of the PM session, 2 p.m. New York time. Take note of that. So now within, let me just widen it. So now within the PM session, within this time window here, we're only interested in getting a buy confirmation because on our H4, we have the long-term perspective, which is bullish. On our M30, we have an intermediate term perspective, which is bullish. Then on our M3 time frame, we want to look out for a confirmation entry within the PM session, right? Because that is where price usually moves with volatility. Though not as aggressive as the New York open session. The PM session is a bit, calmer. It's not so erratic and scary like the open session. That is why I fell in love with the PM session. It's not so volatile, but price moves with purpose. That is how I can describe it. Price usually moves with purpose during that time. And the spreads during that time are not so funny. It's a very calm environment based on my analysis I've been doing. So now for the confirmation, what we want to see is we want to see price, we want to see a market structure shift. So we want to see price breaking that level there, right? If price can break that level, then we can confirm that it is a bullish confirmation. So let me just put that there. We want to see a shift in market structure. Price needs to break that level there. So I'm just going to play it, the replay tool. First candle, second candle, third candle, fourth candle, fifth candle, 6, 7, 8. So what we notice there? There's something interesting which is happening there. I want you to look at this critically, right? We have order pairing there, right? We had a stop hunt there, right? So what happened here, basically, the smart money ordered there buy orders with sell stops that were resting below there. And this basically took out impatient traders who just bought aggressively. They've been taken out. So now this is another confirmation. We have a buy program activated by the smart money. We have order pairing here. So the sell stops that were resting below here have been ordered with the smart money buy orders. So meaning this is now more confirmation that price will continue going up, right? So let me open up the next candle. Next candle. Now, what do you notice there? We can now see the confirmation. Price has broken that level. So that is a confirmed market structure shift. So what I'm looking at is this order block here. So we have an order block here. That is an order block. That is an order block. So we're going to place our entries at this order block there. So now the reason why it's a high probability order block is because this down close candle took out liquidity, right? It purged liquidity. That is why it's a very high probability order block, right? That down close candle. So what I'm going to do, I'm going to place my limit orders. I'm going to place my limit orders. Let me okay, so these are my limit orders. So I placed my buy limit there. And then I'm going to place my stop loss right below that order pairing, right? So now, what is my target? That is a question that someone could ask. So right above here, we have what we call buy stops. Right above here, that is our most immediate target. And that is where you should place your fast take profit objective. And we have what we call buy stops there. We have buy stops there. So basically, price is drawing towards this buy side liquidity, right? These buy stops create what we call buy side liquidity. And that is where we want to place our take profit around there, where those buy stops are resting. Yeah, so let me play. So now you can see price, enter that order block. We're now in the trade. It then started pushing towards the buy stops within the PM session. You can notice all this is happening within the PM session between 2 p.m. to 3 p.m. New York time. Take note of that. And as I said, by 3:45, you should be out of your positions because the session will close at 4 p.m. So as you can see, price hit our objective. And let me just come back here. Yeah, so this was the trade, as you can see. Yeah, so this was the trade, as you can see. So at this point, my entry was already at break even. You can see we had that order pairing. Entry was around the order block, and price was pushing towards our buy stop objective. And as we can see, it exited in profit, and that is now the conclusion of my breakdown. And I believe I've gotten insight on my thought process, and I'll keep on sharing, recaps every weekend when I can. And I believe most of you will appreciate trading the PM session. It's a very powerful session. I've done lots of back testing on it. It's a very, very high probability model, which I would recommend to anyone who would want to have a consistent approach to trading. Because I'm only targeting, one trade per day. One trade per day. I'm looking out for high quality setups with a confirmation, long-term perspective, intermediate-term perspective, and then the short-term perspective where we get our confirmations. Otherwise, thank you for watching, and for those viewing for the first time, you can subscribe, like, and comment. Otherwise, let me end it here. Have a wonderful week ahead of you. Bye-bye.